What you're watching right now is not a normal silver rally. This is not speculative froth. This is not a temporary surge driven by traders chasing momentum. What's happening in the silver market is something far rarer and far more important. A grassroots panic bid forming from the physical side outward. I spoke directly with a bullion dealer, someone who has been in this business through multiple cycles, and they were clear about one thing. They have never seen demand like this, not in 2008, not in 2011, not even during the COVID shock. Local coin shops are being cleaned out, not by institutions, but by everyday people. First-time buyers, long-term savers, business owners, retirees, people who normally don't touch precious metals, now lining up to buy whatever silver they can physically get their hands on. Silver price spikes have officially crossed into mainstream awareness. Once silver hits the nightly news, the dynamic changes completely. That's when curiosity turns into urgency. That's when people stop asking, should I buy? And start asking, is there any left? And that's exactly what bullion dealers are reporting. At one point, this shop was completely sold out of all pure silver. No rounds, no bars, no coins, empty trays, empty shelves. The only silver left in the entire shop was a single Engelhard silver bar, a legacy bar from an era when silver production was very different from today. That wasn't symbolic, it was diagnostic. Engelhard bars are not being made anymore. When old stock becomes the last available inventory, it tells you new supply is not keeping up with demand. This is the part most people don't understand. Silver panic buying doesn't start in futures markets. It starts in local shops. Futures traders can be flushed out with margin hikes. Paper prices can be smashed in minutes. But when physical buyers decide silver is money again, supply doesn't magically appear. Refiners operate on timelines. Mints operate on contracts. Mining output cannot be turned on like a switch. And silver is uniquely constrained because the majority of it is mined as a byproduct, meaning higher prices don't instantly lead to higher production. This is why silver price is now whipping violently, up, down, sideways, because the paper market is trying to reassert control while the physical market is screaming scarcity. Silver has already surged over 150% in 2025, and that number alone is enough to pull in a completely new class of buyer. These are not stackers. These are not hobbyists. These are people reacting to instability, currency erosion, banking stress, geopolitical risk, and a growing distrust of financial systems. When people who have never owned silver suddenly go all in, that's not speculation. That's capital fleeing uncertainty. And history shows that once that behavior starts, it doesn't stop easily. It feeds on itself. Rising prices validate fear. Fear creates demand. Demand drains inventory. Empty shelves create more fear. This is how silver moves from a niche asset into a public obsession. If you're still watching right now, this is where I want you to pause and subscribe, because what comes next is not about what just happened, but about what this kind of demand historically leads to. Drop your thoughts in the comments as well. Do you think this is just the beginning, or are we already near a blow-off phase? Because the second half of this discussion is where silver's next year comes into focus. To understand where silver price goes from here and whether $100 silver in 2026 is realistic, you need to understand how silver bull markets actually end. They do not end when demand is strong. They do not end when inventories are tight. They end only when demand is destroyed by price. And we are nowhere near that point yet. In fact, what bullion dealers are describing right now is the early to mid-acceleration phase of a physical-driven bull market. That phase is characterized by extreme volatility, frequent pullbacks, sudden spikes, and widespread disbelief. People still argue that silver is too high, even as shops run out. That disbelief is fuel. The key distinction right now is between price and availability. Price is quoted globally every second. Availability is local, fragmented, and slow to respond. When silver is trading near all-time highs and still disappearing from shelves, it means price has not yet rationed demand. Historically, silver only truly slows when prices become psychologically unbearable for average buyers. That didn't happen at 30. It didn't happen at 50. In past cycles, it happened well after mainstream participation peaked. Right now, mainstream participation is just beginning. The idea of 100 silver next year sounds extreme, only if you anchor to yesterday's prices instead of today's conditions. Consider this. Silver's previous nominal highs occurred in markets with far less global debt, far less industrial dependence, and far less monetary instability than today. Adjusted for modern liquidity and money supply expansion, silver's historical peaks would already imply prices well north of current levels. Add in record physical demand, tight inventories, supply rigidity, and a global environment where trust in institutions is eroding, and the math stops looking radical. It starts looking plausible. But here's the critical point most people miss. The biggest risk to silver is not collapse, it's control. As prices rise, pressure increases on exchanges, governments, and regulators to intervene. That can take the form of margin hikes, taxes, reporting requirements, or discouragement of ownership. None of those create silver. They only delay repricing. And delays don't cancel outcomes, they compress them. When silver finally breaks through control mechanisms, it doesn't move politely. It gaps, it overshoots, it shocks. So where does that leave us heading into 2026? Expect continued volatility. Expect sharp corrections designed to scare weak hands. Expect moments where silver looks broken right before it rips higher again. But as long as physical demand remains this intense, and as long as inventories fail to rebuild, the trend remains intact. Bullion dealers don't lie about empty shelves, they can't. If there's no silver, there's no business. Now I'll leave the final question with you. Do you think $100 silver is inevitable, or do you think intervention will cap prices before then? Do you believe physical demand will cool or accelerate as more people wake up? Leave your answer in the comments. This market is no longer theoretical. It's happening at the counter, not just on a screen.